So we've deliberately delayed this quarter reporting because we were waiting for the outcome of the federal election. Not that it made much difference because all the parties were pretty vanilla, and housing, well, they were all taking the same tact, helping the first home buyer but doing really nothing for the supply issue and helping developers. So where do we see that with property? Well, we see interest rates continuing to come down. We've even seen the big four jump on the bandwagon and bringing them down without the RBA's direction. So as interest rates keep coming down, and they're predicting 2 to 4 rate decreases in 25, along with, say, the $3 billion of HECS debt that's been forgiven, there's going to be a lot of first home buying and professionals out there buying in the market to stimulate more in the marketplace that is so short of supply already. I don't know where it's going to end. So with everything that's been unleashed from the US with Trumponomics, that is only going to help push our real estate market further. What happens in this time of scarcity and people are worried about what's going on in the stock market? They take their money out of the stock market and seek refuge in gold or property, and nothing's safe for them, bricks and mortar, and gold doesn't pay rent. The beauty of property, it pays rent. So we see the residential market continuing to fire through. I would suggest we've got another 3 to 5 years of very, very strong growth in the residential market. If you're not in the residential market, you should beg, borrow and steal to get into that market, because it's still a long way off us being able to hit peak supply to balance it, bring it back into balance. There's less than 5,000 listings on the market today, so the residential market is going to continue operating very highly. So commercial property market will be another great benefactor from the fallout from Trumponomics and decreasing interest rates, while people secure great prime investments such as industrial property, which is going off like a gangbusters at the moment, will continue to do so. That's a fallout from COVID times. Vacancy factor is less than 2% in warehousing. Commercial market being office, it's 15% vacancy here in the city, not so flash. Retail's pretty patchy across the point, but commercial property, especially with interest rates coming down, will still be a favoured potential for investors. So rural market, it's come off boil in the last 12, 18 months, but still very strong, very good where it's at the moment. Unfortunately, the thing against WA farmers at the moment is this beautiful weather, near 30 degrees in the middle of May. We need rain to grow crops. With Labor back in, they'll ban the live exports as well. So, you know, that will push against the farmers, but I still see the rural market being very strong. And indeed, the special lifestyle rural market and the Vespers still going very strong as people seek an alternative lifestyle. Rural's looking pretty good. So the first quarter of 25, it's been a little bit subdued compared to what we've seen in the last couple of years, that's for sure. But because of all the factors we spoke of, 1,500 people a week coming into our state, interest rates on the way down, 2 to 4 reductions suggested through the rest of 25. The chaos called in the stock market that is making people move to property, and already people out there trying to beg, borrow and steal to get into the market. So guys, if you're not in the market, I'm suggesting we're seeing great growth for another 3 to 5 years or beyond. West Australia is a great place to be. Perth's a great place to be. If you need assistance, please reach out. Thank you, guys.